Welcome to Austrian Econ Theory. I'm Justin Rowe. I'm making this video as a reply to Alex Merced's video about financing government through equity. I met Alex at this year's International Students for Liberty Conference. He's a libertarian blogger and an ambassador for the Seasetting Institute. Now, as for my thoughts on this thought experiment, I made a comment in this video that in a democracy, effectively, the citizens are the shareholders of equity because they reap the social profits and bear the equity tranche of risk if the government succeeds or fails, one could argue. I also am an anarcho-capitalist, so this is a thought experiment. I'm in no way endorsing the state or using the commonly used defense that the government is us. So, but as far as financial fiscal theory would go in this thought experiment, that's sort of a position I would state. So Alex admits that it would be difficult to issue full common stock, and that if you did offer common stock, that it would not pay dividends. So his proposal is to offer preferred shares whose in reality it would be almost identical to treasury securities. The difference, he says, is that if times were tough, whatever that means, they wouldn't pay dividends. Times are always tough if you're looking at our budget deficit, but excuse me. So I want to talk a little bit about his proposal of preferred shares, but I also want to throw around my, and that the idea, it's not really my idea, the idea of a common stock. Now, I mentioned that there's a risk of creating perverse incentives because governments operate, they generally don't earn profits in the marketplace. Their main source of revenue is taxation. So if you create a equity position or an equity stake in the government, you create a perverse incentive for taxation for the generation of revenue or creating value for the shareholders instead of serving the more generally accepted role of government. So imagine the IRS being privatized. That's kind of a scary thought. Taxation has been privatized in the past, and the outcomes were pretty disastrous. I think it was in Rome and maybe in England they might have privatized taxation too at some point. So if someone doesn't pay their bills to the government, they basically auction off their rights to collect revenues for the government, and they're historically pretty ruthless. There are some functions of government I'm particularly pleased that the government is inefficient at performing. Look at history, what happened when you applied German efficiency to the worst functions of government. So now to apply a pure common stock that wouldn't pay, if it wouldn't pay dividends, how would it work and what would give it value? I would put forth the notion that common stock that doesn't pay dividends has value, because at some point the value of the company could be liquidated, and the expected revenues, the expected liquidated value would be in excess of the book value and in excess of the debts, the liabilities. So in accounting, this is called the goodwill of the company. I don't know how much goodwill there is in governments. So what, since you couldn't auction off the brand, the goodwill is basically how much faith is in the brand of the company. If you were to sell, say, Twitter as a company, they probably have, just one office and not a lot of physical assets, but the brand of Twitter, has value just because it's Twitter or Facebook. So that is called the goodwill. So unless you could somehow auction off the rights to, the Star Spangled Banner or something, I don't know how you'd worry about goodwill, unless it were collateralized by real assets. So I agree in this notion with Alex that some functions of government might actually be semi-privatizable. The first thing that comes to mind for me, two or three things, are post office. You could effectively privatize that. They've done it in Japan. The Department of Interior, they own a lot of real estate in America, so you could back up the equity securities with that real estate. But then you get into some areas of perverse incentives. If these marketable securities have voting rights, as for the functions of this department that you purchase, so for example, say you're a logging company or a natural gas driller and you want to obtain mineral or logging rights, then you could effectively, literally, buy a politician and use the property to extract. It becomes it definitely becomes, through privatization, you get the tragedy of the commons. So you get all the downsides, you retain all the downsides of commonly owned property, but with none of the upside of this privatization. I think it would only make it worse. But that wasn't what Alex was arguing for. I was just throwing that out as a more fully fleshing out a possibility of equity financing. So there have been bonds, for example, that were, I think Germany, after they had their hyperinflation, in order to regain trust, that the government debt became backed by the real estate of the country. So that's something where if the government were to default on its payments, it would have used as collateral, maybe in the contract, a specified group of assets. So the government defaults, we sell Yellowstone to our investors, to China or whatever. I don't know. It's just an idea. So Mount Rushmore. Excuse me. So now I'll talk about the preferred shares. I don't see how in practice it would be that much different from being a normal treasury security. The only difference is that effectively treasury securities would be senior and the preferred shares would be subordinate or junior. So what this would do is create separate classes of the same type of securities, and what that does is the junior class or the junior tranche will, to compensate for the risk that they would get wiped out first in the event of a partial or structured default. They command a higher risk, higher return for the risk, I mean. So really all this would do is increase the borrowing costs for the government, and since the Federal Reserve would probably just buy up any any bonds anyways, to keep the interest rates down. I don't know. I don't see how it'd be beneficial. I think all it would do is create more systemic risk and increase the borrowing costs for the government. As far as like I said, maybe there's an idea that certain functions of government, like the post office or the Department of Interior, National Forest, maybe these could be, a more quasi equity, like a preferred share, that are backed by specified collateral, that have contingencies that if there's a default, this is how, what contingency will spring. Those are just my thoughts. Anyways, thanks for listening.